Welcome to part 14 of our financial statements video training. In this video, we calculate a company's free cash flow and again stress the importance of the statement of cash flows. We conclude with a presentation of the statement of owner's equity. Please print the PDF handout shown below this video as it will be used throughout the training.
Okay, let's go to the second page of statement of cash flows. And there we mentioned that a lot of people will use the acronym SCF or cash flow statement instead of statement of cash flows. And we usually explain the difference between the cash and cash equivalents. So we look at the total cash and cash equivalents and explain that difference. So the title just says cash flows, but we're actually explaining the amount between two balance sheet dates. So again, this is a period of time, and we're saying what happened between those 2 points on the balance sheet, and we're going to tell you what happens here. And we mentioned that the quality of earnings is sometimes perceived to be more cash than from operating activities than we had in net income. The next thing I want to mention is that in the financial news, many times they talk about free cash flow. So free cash flow is some indication of how much cash the company's got left over after its operating activities and any capital expenditures that are necessary to keep the company going. So the formula is listed here. The cash flows from operating activities, that's coming right off the cash flow statement, the top section, the total cash flows from operating activities, minus the capital expenditures, which appeared in the second section of the statement of cash flows, and that will equal the free cash flows. So if we go back to our example here for the statement of cash flow we had, there was $76,759 coming from operating activities and $70,000 from capital expenditures. So very little free cash flow, $6,000 or so in cash flow. Right? So if that $70,000 was normal and that they have to do this just to replace stuff or their normal business operations, they don't really have any cash left over. And then some people go and subtract dividends because if people are dependent on those dividends, we cannot eliminate the dividends. So now some people would say your free cash flow is really negative when you take into account dividends. Okay? So again, the statement of cash flow is a bit tough, but very, very valuable. And if you just look at the totals, you'll get lots of insight. And again, if you need more detail, we've gone through a step-by-step analysis of the statement of cash flow for free on